All right, welcome everyone. Thank you for joining us today. Digital Art Month is in full force, and as usual, we are very keen on cultural programming. So today we are excited to change gears a little bit and to speak not just about digital art, but about other interesting things for a change. So today we're talking about alternative investments. And I think we're going to start in just a couple of moments. We'll let more people in. Perfect. All right. So once again, welcome. All the comments and questions can go into the chat section of Zoom, as I guess all of you are pretty much familiar with, too familiar at this point. And we're going to answer as many questions as possible at the end of the talk. It's conversation, so we will be asking some questions. And yeah, please feel free to send as many questions as you want. We have a wonderful panel of speakers today. I'm very excited to be joined by great professionals, and I'm especially pleased to be joined by the businesses that we don't usually have in our talks. So that makes it much more exciting for me today. So I will introduce our speakers very briefly right now, but the first question is, of course, about them introducing themselves. So, but anyway, we have here with us today Joy Marcus, working at JVP. We have Peter Mann, working at Saga Invest. Thomas Steuer, who is pilot and car specialist and will tell us all about car investments. Elisa Galuppi, who has an extensive experience working with the auction houses. And also Vlad Ginzburg, who is running Block Party and will tell us all about blockchain and art. And thank you, all of you, for joining us here today. And yes, my first question is, I guess, as expected, if you can, each of you introduce yourself and also introduce the market that you're working with, because each of you seems to be working in a very, very diverse market, and we'd love to hear more about it. So maybe I see you, Peter, Thomas, Elisa, Joy, Vlad. Maybe we can go in that order. And then I guess I'm missing someone. So let's start with Peter. Peter, can you tell us a little bit about yourself and your market?
Good afternoon to everybody. I'm not going to tell you too much about myself because that's not terribly interesting, but about the markets that we look at, I come from a very traditional background of commodity trading and in the agricultural sector, and it occurred to me some time ago that the best way to stay young was to look at how the world was evolving and how people were investing in terms of their desires to collect, to invest, and to purchase. So we created a vehicle called Saga Invest, whose purpose is to look for opportunities in what I would like to refer to as the new world as it develops, with the younger professional people who are looking to invest in a very different way, perhaps, than we did 20, 30 years ago, and collect. And the art sector is a sector that I was particularly keen on and looking to see how it develops. I'm still somebody who likes to hang a picture on the wall, but or park a car in the garage, as far as Thomas will understand. But I do understand, and I see how that is evolving. Obviously, the events of the past 9 months have accelerated that process in a very large extent. And some of the questions that arise from that process of which includes you mentioned it yourself, the blockchain aspect, the way people perceive where they want to place their assets, how they want to build an asset structure, how they want to collect, is a very, very different set of circumstances today. And I think it's an interesting one, and it's one that one cannot ignore. So being part of that journey, I think, is an important one. It's obviously, in many ways, one treads into the unknown, but I think it's fascinating. And when I see that the Digital Art Month makes it into the New York Times, which even here in Europe, we see flash up on the screens as one of the things you need to do on a weekend in New York. I only regret that we can't be in New York more often, because I would have loved to have been there. But I think it's a telling story as we move forward. And I think what's important from an investment perspective, whether you're a large investor or a small investor, is to have an open mind and to see how the trends are evolving. And that includes how art leans towards gaming, and gaming leans towards art, and there's a mix of the two, and how one interprets, again, we mentioned the blockchain aspect, the originality of work, and all of that is important, and it's a fast-moving process, and it covers everything from collectors to museums to just about every aspect that one can think of. And I think that is what makes it interesting. And debates such as these, and getting to know people who are of a like mind, is always an interesting experience, because it allows us to accelerate a process and find the right paths. So, and not that there are any wrong ones particularly, but I think that it's important to do that. So my commitment to the new world and a new order, which obviously gets affected by the current worldwide situation, is a very real one.
Great. And the focus of your investments then is mostly, just for our audience to keep a track, is mostly art and art-related products, or it's a best?
It's mostly art and art-related products. And art is has a very large scope. One can, everything from street art to digital art to augmented reality to virtual reality to the whole 9 yards. And you know, it's a difficult game to follow, a difficult path to follow, because some of it is successful and some of it has more difficulty in getting recognized. I mean, if you just look at the evolution of street art over the past, 5 or 6 years, it's absolutely incredible. I mean, the whole point of street art was that it was art that you didn't hang on a wall, and you took it into the street. Mm-hmm. And today you're hanging it on walls, or you're converting it into some form of a digital rendition. And there's an ephemeral aspect to both digital and street art that's not uninteresting, how one preserves it. Virtual museums, the fact that it's very difficult to go into a museum today, are a thing of interest. And I think how we educate the next generation, the younger generations, I shouldn't say the next, because the next are already educated in many ways, I think is a very key thing. And I think that Digital Art Month is a perfect expression of that birth, that beginning.
Perfect. Thank you. So I will just go in the order of the Zoom presentation for me, if that's okay. So I have Thomas next to me. So can you please introduce yourself and tell us a couple of words about your interest and your investment practice?
Absolutely. Well, thank you for having me. It's a pleasure to meet you all. It's an interesting world, the one that we're living in right now. I'll tell you a little bit of my background quickly. I am from Colombia. I'm speaking to you from Colombia. I'm into private equity as a profession. Our last investment has been gyms. So in the fitness industry, we started not long ago, and it's a growing industry, very interesting. But on the other side of my parallel life, I would say it's vintage cars. So I'm here to share with you some insights about this market, which has been a growing market in different places of the world for different aspects. I think Peter touched a very interesting point, and CADAF is involved with art, but many people say the cars are art itself. They were made a long history. They've marked important milestones in history. So very interesting people have had cars, coach builders, engines, and all this brings alternative investments to a table because they become a piece of art themselves. There's this project that started in 1975 with BMW, which I think it's the best example for car-related and art world. And it was a French race car driver who was a very good friend with an American artist, Alexander Calder. And he said he was going to race this very famous race in France. It's called the 24 Hours of Le Mans, which I think most of us have heard about it. And he asked to paint the car in a way that nobody had ever done before. And they're well known, and that's where BMW started the art cars. Since then, we've had 19 cars total, and we've had very famous artists, started from Roy Lichtenstein, Frank Stella, Andy Warhol, Jeff Koons, and several others. But I hope I can give you a nice scope of what the vintage car and actually the modern car world has turned into. But we'll get into more details into that.
Tom, what's interesting, if I may, is Thomas raises a very, very interesting point. A friend of mine raced a Porsche at Le Mans that was painted. It was an art car in 1997 or 8, somewhere in that. He had prints made of that car, and he sold the rights to the prints that actually paid for the entry into Le Mans at the time, and that's 30 years ago. It's a very interesting thing because in many ways, what you've just described is a precursor to where we are now. It's the digitalization of an art car. And just so you know, you may not know, there is a BMW art car that will race at Spa this weekend in the 24-hour race, which is run by a fellow by the name of Karim Auger. So it's very much there, but it's the whole digitalization of that process that I think is terribly interesting, because the actual physical car is no longer the key point of what we're talking about here. It is the ability for people to download it, to buy a print, to augment its reality in many ways. And I think that's a very interesting point, if I may interrupt you. I'm sorry, Thomas.
Absolutely, Peter. And I absolutely agree. As you mentioned before, we are seeing a lot of different types of investments. We never thought to have a digitalized car that you could actually purchase or own yourself. But things are changing quickly, and I think the pandemic has played a huge role in this because it has accelerated in different aspects all the digitalization of a lot of different industries. but we'll get into this in a little. I'll let my colleagues go ahead and present themselves.
Perfect. Yeah, no, I think the example with the prints is very interesting because if you can imagine, selling digital art is still quite complicated. So the way we go around it is we indeed sell prints of the artists that we present at the shows, and those are limited edition prints. I think that's a very good comparison. So the next on my view is Elisa. So Elisa, if you can introduce yourself and tell us a little bit about the auctions and how auctions are looking at luxury and your experience with that.
Definitely. Thank you to everyone for having me, and good afternoon or good morning to everybody. I'm here to talk about the luxury investment, and every time we use the name luxury, so many people think about the brands, and so many people think about the flashy and only the blings, but actually there is a lot, as Thomas was saying, there is a lot of work behind, of course, you know, the economy of luxury, but also I think we will focus mainly on the items that can be collected, and the items and the goods that actually create a collection, because now there is the tendency not only to amass a huge amount of, you know, brand and new flashy things, but it's actually historical jewels or historical watches, and the provenance, of course, it's very important when collecting something. So I think we will focus mainly on what auction houses are for that. I mean, you know, are in this environment, but also I think it's really interesting to see that how the pandemic has changed the auction house and the perception of the auction houses, big or even, you know, smaller and bigger and major auction houses as well, because especially the major auction houses have been, I think, a bit. They are always an intimidating environment for collectors to penetrate. But now that everything is online and the majority of the auctions are online, there was this major shift to also change the way people approach and start knowing the auction houses, and new collectors start seeing the auction houses as a more accessible a collection, you know, accessible environment for they to start building their collections. And of course, there are different price points, and there are different, you know, entry points versus the high end. So that's something that also has pushed the auction houses to really invest. They already start investing in the digital. Mm-hmm. However, they were a bit shy or a bit slow, or I would say majorly, I mean, mainly very traditional in their way of going digital. But now this one, they had no choice now. So the big investments were, you know, were there, and it was a big push for them. So that's a good one. But thank you for having me, and yes, we will go more in depth on that.
Absolutely. No, thank you for joining. Joy, can you tell us a little bit about you?
So I feel like I'm a little bit an outlier in the group, in that really I don't focus on a single class, you know, art, fashion we talked about, as cars. As investing, I invest in everything that is tech-based. So JVP is a tech based investor. It's a traditional, you know, venture capital firm. We, you know, and it's also an asset class. To the extent that it bears resemblance to any of this, it's a very distinct asset class. So what we're really investing in was a prediction of the future, right? Because we invest in companies that have not yet fulfilled their potential. So our business is basically to predict the future. That's what we do. We're futurists. And in thinking about some of the classes in which, you know, you guys trade in, so be it art, be it cars, be it any kind of luxury item, fashion, we look at the trends of the future and try to figure out who is going to provide the technical backbone to some of the trends that you guys are observing. And then we invest in that company. That's what we like to do. So that would be where we play in this. And I do think that the trends are very, they're very almost easy to see right now, right? So in terms of luxury, certainly in terms of luxury fashion, with the advent of the Real and some competitors in the bag market, including a company called Rebag, which I think is extremely interesting, and I'll tell you why. You're seeing high-level technical solutions to enable a secondary market. So you don't need to go to a mom and pop resale store, consignment store on the Upper East Side of Manhattan, or somewhere in Paris. They actually, you can do it all online, and people are beginning to trust that way, even with the very high end of that market. Might be like the sort of skinned Birkin bags that are $20,000, $30,000, and those items are trading. And one trend that I think is really interesting is that there is an effort using data to create a more transparent marketplace for those goods. And Rebag, I don't know if you guys are familiar with the company, it's actually French founder Charles Gora, who created a basically blue book for high-end handbags called Claire. It was launched like a month ago. And I think it follows this trend of giving the consumer more transparency into pricing and kind of what they are getting. A lot of the markets we're talking about today are extremely opaque to consumers. And I don't think Gen Z will stand for that. They live their lives out loud. Everybody knows everything about everything. I don't think that they will accept markets that are traded on, kind of winks and kisses and who gets into the right club. It's just, I think that will begin to go away, and people will, and also as wealth transfers to people who don't care about those things, right? Like the billionaires in Silicon Valley, they're not really, maybe some of them are, but a lot of them aren't really about the clubs they're getting into. They want value. They want beautiful things on their walls. They want to wear beautiful clothing that is comfortable, but they want to kind of know what things are worth, and they expect radical transparency. So I think there's going to be a movement in that direction. And I can tell you that we will be investing likely in those movements. And then I just wanted to observe, like, as an asset class, there was a study done by Citi not that long ago. And art, I mean, you guys are more familiar than I am. Art is a very, in terms of returns, modern art especially, has returned, certainly better than cash and better than commodities. So as an asset class, so it's a very distinctive asset class we should all pay very close attention to. And I think technology can give us kind of this radical transparency into the market. So we invest in the future, basically. That's what we like to invest in.
Can I, Joy, I find your last statement a fascinating one, and I'm not going to disagree with it.
Yeah.
But I think where it becomes terribly important and interesting, and as this is a debate, I'm allowing myself to interrupt,
please.
Is that the asset class that art represents, where it has outperformed just about everything, and I agree with that, is also a function of an old-fashioned system, whereby the maiden auction houses have rallied certain sectors of the art market in such a way that it dragged everything else along. But as the world changes, and those auction houses that represent the opacity of which you talk about in terms of goods, and I agree with, they are going to have to morph themselves into something very different. And that may change the pace with which art becomes inaccessible to the masses.
Right. It may, you're saying it might drive the prices up even, right?
It might, it might drive the prices up, but it might also allow other people, the people, everyone who's not a Silicon Valley billionaire, into give them the ability to participate.
Absolutely,
and it will, and
totally
it's going to widen. It's going to widen the scope of those marketplaces, and I think that's something that's terribly interesting.
Yeah, me too. It's sort of the democratization almost of art, because of transparency, because you kind of know what you're getting and there's less of a fear factor involved. I mean, I can tell you that it's happening in women's handbags. Literally, it's happening right now. So when you buy a Chanel bag now, you
I don't
know. I do. And you kind of know, and it's not an insubstantial purchase, right? It's many thousands of dollars, depending on the bag. Sure. And you know kind of what it'll be worth in 5 years, likely, based on the style and model and color and, you know, all of that. Not exactly, not precisely, but you have some idea based on, well, this thing that Rebag just did with Claire is amazing. So as that gets data fed into it, that will be basically a blue book. But even just looking at the real pricing, even eBay pricing for these things, you really get a sense of what things are worth. And we didn't have that 10 years ago. I probably bought my first super luxury bag 10 years ago. I had no idea. I just wanted it. Now I kind of know. And I have places I can sell it. So I think it's good for everybody.
I agree. Speaking about transparency, at least in the art world, there used to be a huge hope, and I think there's still a big hope that blockchain is going to bring more transparency and liquidity to the art market, and specifically to some areas of the art market that traditionally weren't that successful, like digital art and everything that's connected with the digital art. So I think, Vlad, if you can tell us a couple of words about your marketplace and your take on blockchain these days and what's going on.
Sure. Thank you, Elena. Thank you for having me. And by the way, I'm super proud that since CADAF got started, Block Party's been supporting CADAF and vice versa. CADAF's been supporting Block Party. It's been a really wonderful partnership, and to see where it's come after a year and less than a year and a half is really a treat. So thank you again for having me. I think I learned about blockchain somewhere in the middle of my art career. I entered the fine art space as I was pretty straight out of college as a financial analyst and helping high net worth individuals understand their assets from an investment standpoint that wouldn't necessarily be considered traditional assets like stocks or bonds. And when I started really evaluating art collections and learning how to appraise them, I began becoming interested in art as an investment and learning all the reasons why art traditionally isn't considered a great investment. I think somebody pointed out in the chat that the data shows that a very small percentage actually nets profits, and well, that's true. And so I started to try to quantify what factors drive those small percentage of art investments that do make 10x, 20x, 30x. What makes those a factor, and try to understand them a little bit better, and adding qualifying data. So it's not nobody ever is going to be shocked that if somebody buys a painting and then the MoMA requests to borrow it for an exhibition, that painting is going to become more expensive. But how much more expensive on average? And what's the difference between the MoMA and the Reina Sofia and other museums? And everybody knows that there's good provenance and bad provenance, but can we quantify good provenance, bad provenance? And something that I would joke around with clients. I was like, we're comparing apples to oranges, to grapes, to bananas to figure out the price of a mango, but it's the best we got. I learned about blockchain somewhere around 2016 because everybody was like, hey, everybody should use a blockchain to replace the catalog raisonné. And I didn't really see the value in that. But as I spent time in the blockchain business, I became exposed to non-fungible tokens and digital art. And that's really when I had the aha moment of where blockchain can really fit in. It's not to revolutionize, 100-year-old paintings or contemporary art and impressionists and moderns and old masters. There are plenty of really brilliant and hardworking people that work on that every day. But actually, here's a medium of art that's actually existed for decades, but it's never really been monetized properly. And I kind of thought about, and this is actually Andreas. I talked about this with Andrea and Elena and Fanny in a call once, but we were the comparison I would make with digital art and the moment that it's having right now with blockchain is that, for so many decades, digital art existed, but it existed in the same way that ebooks existed since the computer was invented, and authors would write entire novels on Microsoft Word, but you can't monetize that. You still have to get it published and print it in a book format. Well, eventually there was an iPad, which gave way to a Kindle. And I kind of feel that thanks to the blockchain and thanks to non-fungible tokens, there's an opportunity for digital art to have its iPad Kindle moment, where you can start packaging a digital file into something that's truly ownable, and thus make it monetizable. And so that's where Block Party is working right now, mainly to attach the non-fungible token to digital artworks, and actually some newer physical artworks as well. Anecdotally, I became an art dealer in 2010. Right around 2010 is also, maybe a year or two later, I actually started Ginzburg Fine Arts, the art fund, and we ended up with over $100 million in paintings under management. However, that was also around the time that some of you may remember that the Warhol Foundation and the Keith Haring Foundation and many contemporary artwork foundations threw their hands up and said, hey, we can't really tell fakes from real paintings anymore. We just can't do it. The fakes are too good. And so, whereas most of my friends thought that being an art dealer was super glamorous, it actually wasn't. It was actually tracking down shipping records of a Warhol painting leaving the factory and then trying to track down where it went, customs documents, where it went after that, and delivering to the client. The painting was the cherry on top of my work. Most of my work was actually demonstrating that a proper chain of title and movement to the point that they got the work. And I think that anecdote is so important today. And that's the purpose of blockchain, not to supplant a catalog raisonné, but it's to lend, not only help monetize digital art, but also to lend a new tool to track the movements of an artwork such that the chain of title is the new certificate of authenticity. So we're here to help with that.
Yeah, I think this is very true, and this is probably very relevant to all of the asset classes that we're talking about today. We touched upon this a little bit, but I wanted to ask each of you about kind of risk and reward that one can get with the asset classes that you are working with. So I don't know, with art, it's traditionally a lack of transparency that has been there, a lack of any regulations, hard to track provenance, all that. I'm sure it can be referred to the other luxury asset classes, to the cars and to the other things like that. But I'm curious to hear what do you feel like the most risky and the most rewarding aspects in investing in the asset classes that you are working with? And again, feel free to jump in, or we can go in the same order.
I'll jump in with fine art, and not to go at length, but just the two big topics that always dealt with were, well, there used to be three. It used to be liquidity, but then there was an auction every 2 weeks somewhere in the world, so that was fine. But the main one I would say is price discovery. We have tools like ArtNet. We have tools like but generally speaking, to understand an asset and investment really well, you need great price discovery. But ArtNet and auctions in general account for about a third of the entire art market. So you really only have visibility to discover a third of what's really going on a global perspective, and that doesn't really help with the transparency, as Joy was saying. That's such a key thing moving forward in art collecting. So I would say, yeah, I would toss up price discovery as my main comment there.
Well, if I may, in addition to what Vlad said, between fake and originals, I see the car world is very exposed to this. Since we're speaking about cars that have over 100 years old, there are a lot of cars that have been lost through time. So there's a lot of fake and replicas running around. So the use of blockchain has played an important role because you can track the provenance of the car. So I would say that's one of the risks that you are facing, because nowadays you got all the technology to build the car exactly as it was built 20, 50, 100 years ago. So it's definitely one of the important things or aspects to keep in mind. In addition to this, I think most of the markets are lacking regulations. On the other side of it, for vintage cars, we see that a lot of regulations are, affecting the prices, or can be threatening the prices, better said, due to emissions, due to taxes and different, ecosystem regulations that could be a threat to this market. But on the flip side, if you were to buy a car 10 years ago, it was the best performing alternative investment. So on average, over the last 10 years, cars have risen 280% on average. So it's definitely an interesting market. And as long as you know how to pick, and I think that's the same for most of markets, if you have a good pick and you have a blue chip investment in that asset class, you're going to be very well off.
Got it. Yeah, it's an interesting question, how to pick. I actually had it in one of my questions. So if you want to also go into that, Elisa and Joy and Vlad and Pierre, that would be great as well. What do you actually look at to make the risks lower and rewards higher?
Well, I think in the luxury industry, there is a lot of fake, definitely. The major auction house obviously are, again, I'm not here promoting auction houses, but the major auction houses are a kind of guarantee that the pieces, especially in the handbags or wine and whiskeys or watches and jewelry, because auction houses have access to both buyers and sellers and big collections, so the provenance is there. So that's definitely something. But the interesting thing that I would say now, it's coming, it's the coming up of synthetic diamonds. And I know that this is very wide as a kind of, but people as a kind of topic, but when people look at buying a diamond now, they want to buy something that it's, again, flashy and big and chunky and very impressive for people. So they would even go to buy synthetic diamonds. And again, nothing wrong in buying synthetic diamonds. Of course, the price is exponentially lower, lower than natural diamonds, because it's something, natural diamonds are something unique, created by nature, and it will never be created again. It can be modified, but it will never be created again. But when we talk about the bling and people looking for the bling, so they will probably go on to the synthetic diamonds. And again, I'm not saying that it's a risk to invest in synthetic diamonds, which are anyway very expensive. But I'm just saying that, of course, something that it's created by nature, definitely, and it's more authentic, is definitely something that would go in the long run for a better investment. The other thing about the synthetic diamonds, and I'm touching on this point just to actually really have a small topic, but the other thing about synthetic diamonds is really, it's something man-made, and it's something that it's probably environmentally not that efficient, because in order to create what nature has created in billions of years, it's definitely not that easy. So there is a lot of energy waste in doing all of that. So there is also a kind of ethical aspect on it. Well, some people would argue, well, many years ago, probably the blood diamonds industry was, sorry, not the blood diamonds industry, but the issue with blood diamonds was in the diamond industry was a big issue. Now it's much more regulated. And I think this is touching also on what other people were saying. We are going online, everything going online now, even multi-million collections and multi-million items being sold online creates more transparency and creates more questions and creates more, people want to know more. So the more collectors are educated, the more they will actually ask for questions and they will ask for transparency. So I think it's a very interesting move from something that wanted to be traditionally very niche, and now is actually expanding into there will be a way to keep it niche somehow, and there will be other items coming in, but people want to know more, and actually it's very important for the business, and I think for any business, to educate clients and to know why they are spending so much on something. And the more people are educated, the more transparency there is in any kind of market, especially in the luxury, where fakes are a big problem, and synthetic gems and synthetic diamonds versus natural gems and natural diamonds is extremely high and extremely important. So when investing, it's really to research, extremely important to research where the item is coming from, and again from an ethical perspective as well. I'm focusing on diamonds, but also I'm focusing on I'm talking also about a more ethical way, let's say for Hermes handbags, which now are becoming a huge investment for people. The Hermes handbags, when they leave the shops already, they are 2 or 3 times higher in value. That's what the statistics say. And again, where the skin is coming from, where the leather is coming from, and and I think this forces also the companies to work more ethically and to find other materials which can be luxurious and beautiful. But yes, so that will be, it will be an interesting topic to see what will happen in the future. What I'm really happy to see is that the online now, especially also for the high end, as we were saying before, the online auctions in the past, and it's not really a long time ago, up to basically 2019, were seen as something that was, a lower end items, not that expensive. Okay, we'll put it online. But now we witnessed it actually multi-million piece of jewelries or watches, or almost at that price auctioned online. So that ceiling has been basically broken, and And I think it really creates vicinity and allows collectors to come in. Both of the major auction houses have reported that 30% of the buyers in the online auction across any level were actually new buyers. I think the challenge now, new buyers under 40 years old. So young buyers, and I think it will be. I think the next challenge probably will be on how to retain those clients. But there is appetite, and there is new collectors start investing. And again, at any level, it's not just major multi-million items. It's actually also lower items, and that's extremely interesting.
Got it. Perfect. Joy, do you want to add something to that?
Yeah, I mean, you talked about risk reward, I think, as like the question.
Yes, that was original
so, yeah. So, you know, we're in the business of, again, predicting, right? So it's high risk, high reward kind of business, like by its very, very nature. And how it relates to sort of the topic of this panel, I think, is we like to invest in disruptors. So, you know, businesses that can potentially really change the world, or at a minimum change the industry in which they operate. And I do think this concept of, there are two things running through luxury that are disruptive. One is authenticity, verifying authenticity easily and value more easily for the consumer. So this going from opaque to transparent. I think in that way, the Real Real has been a great disruptor for luxury clothing, handbags, and jewelry. People went from, you know, you had eBay. If you wanted to sell something online, you had eBay, which no one was really trusting for high-end goods. And the Real came along and said, wait, we'll take authenticity off the table. You know, we will guarantee that this is authentic, or else you can return it. So, and they hold items and they verify them, and it's become, you know, quite a very, very, very successful company. I think others are taking a similar tack, maybe a little bit different. Rebag, where it like actually uses the data it collects to create an industry standard for bags, which I think is sort of an interesting trend. So authenticity and resale value is one thing that I think technology, at least with respect to luxury clothing and bags, and perhaps jewelry, is beginning to sort of take out of the equation. And it's becoming more commonplace to actually know what you're buying, right? To be happy with it. I think someone earlier mentioned the issue of, I think it was Thomas, the issue of sustainability and like, or Elisa, ethical, you know, provenance, if you will. I think we should not underestimate that. I think that the next generation of buyers really, really cares about it. And they're going to kind of be in a world that's disrupted by it, by climate change and the other sort of bad practices that lead to climate change. So we have no right now really good way of verifying that, authenticating sustainability or authenticating ethical behavior. I mean, we have, but it's not systemic in any way. And I think that that will be sort of an interesting, companies will disrupt that and make it transparent. I think we're leaning more towards transparency than anything. And I don't know how it would affect art. You know, is the artist, you know, a bad actor in some way, that I don't want to buy his or her paintings because they are, you know, racist or whatever. Like they're not people I want to be associated with. And we have not really had that transparency either. So into like ethical behavior. So again, I'm about transparency and disruption. So that's my 2 cents on kind of where I think this will head.
Got it. Thank you. Peter, do you want to add anything that you want to add?
I think that I'm going to plagiarize Joy again. I think the key word is disruption. I think that that is where one needs to look as one moves forward. A lot of what you were saying, Elisa, is very true. But if one is going to democratize, sorry, I can't speak French anymore. The marketplace, one has to give it a certain value, and that value comes from its originality, or its originality may be duplicable under certain conditions in a digitalized world, but it needs to have a certificate that Vlad mentioned through a blockchain or some other kind of certification process. So I think that it's an open arena. There's no sure bet, and part of the interest in all of this is taking the risk. No risk, no reward. I mean, it's not a question of buying the S&P and waiting 20 years for it to triple, which it may not do, by the way, I think anymore. But I think it's what makes all of this so terribly interesting, and keeps your neurons flowing and your heart beating. Right, Joy?
Absolutely.
Very good. I think maybe since we're getting to the end of the hour, maybe we can take a look at the questions, which I see there are quite a few, or at least comments. So first I see the question from Darcy, and please jump in. So Darcy is asking, what do you think about the issue of valuing artworks in terms of currency? I'm not sure if anyone has an opinion on that, I guess, about the currency volatility. And Darcy is one of the artists that participated in our shows before, so she's asking from a perspective of the artist, I guess.
I can weigh in here just because I think that there's so much attention within the art, like the fine art investment community, on currency, namely on using the artwork as a hedge against it. Like, I've certainly had clients that live in countries where the currency is not so reliable, and so they might purchase an artwork they feel will hold its value, and that's really where the free ports in Switzerland get interesting, right? Because you can take that painting over to Switzerland, Geneva. There's some in New York now, and Hong Kong, and then just kind of keep it there, because if something should happen with their currency, it's awfully easy to take that painting out to New York to auction it over there, or take it to London to auction it over there, or Paris, or whatever, or wherever they might like to sell it, because it ends up being kind of a medium of exchange. As for the way that looks like, now, also lending the artwork and collateralizing it for loans is really where you start getting into this sort of gray area where it stops being about the art and it starts being about sort of a promissory note, or it starts being just an asset. And I think that that's kind of where that gets icky. I wish I had a more professional word than icky, but you never want to treat artwork as something that is a hedge or simply a matter of collateral.
Great. So then we have a few comments from Jorg, if I'm pronouncing your name correctly. Thank you for joining us. I see you probably run a startup in Germany, and I think some of our speakers already commented. So some of the questions, one of the comments that you stated is Spotify for the art world. and that's maybe something that you're working on. I'm not sure if it's in terms of using AI for the art search, but I think it would be an interesting project. It's a comment to Joy and Peter if they would be interested in looking in a startup like that. That would be something like a Spotify for the art world, and I see that Joy could be interested. Then again, a question from Darcy is, I guess, investments in the art for the people who are not billionaires. So I guess there is a stigma that only very rich, maybe people can invest in art. So I know for sure that, and I guess in any luxury goods, to be honest. So I think that's not exactly the case, but maybe if you'd like to comment on that as well, that would be great. Do you have to be a billionaire to invest in luxury goods, or what's the way around around that?
Absolutely not. I don't think so. And again, luxury can be also something at £1,000 or dollars or whatever. It's. I think again there is this idea that you have to be a millionaire to invest, and absolutely it's not that. And you can start from little and then start building up your collection. The good thing about collecting luxury goods is that you can use them whilst you're actually investing in something. And of course, some people don't like that because things get damaged, especially handbags are the thing that gets more damaged. But again, one has to see collecting something by being passionate about something, about loving something. It's not only the idea of, an artist is basically the same. It's not only about investing or buying something because it will be an investment one day, but it's buying something to enjoy it. And then, of course, that potentially with all the criteria that we told and we spoke about, authenticity, provenance, and the guarantee that something is real, then definitely start building up and amassing a collection. But no, I definitely don't think so. And art has, and digital art in this case, offers so many options. And
if I may add to what Elisa is saying, I think if it's the handbags, if it's jewelry, or if it's cars, investment of passion has to overweight your sense of getting a value in the future. You're probably going to get it if you do it the right way. Most of this market started as an enthusiast market. Then it became a good investment because of the players and the philosophy behind the purchase. But I think the markets are broken when the speculators come in. So I think if you buy a piece of art, if it's a jewelry or a car that you're going to enjoy, it's going to turn out to be a good investment. If you do it from a speculator point of view, it's going to be a bumpy road.
Yes, I definitely agree.
So but ends up being sort of like that kind of jumps into what I sort of started working in the art business and thinking about, which is how did things like speculation and collecting, how that look like in a chart that you might use to analyze the S&P 500. Well, a speculator by nature is looking to just flip the artwork, right? So that basically, in other words, the speculator is coming in and bringing in a whole lot of volume. And then I think too much volume for a scarce asset doesn't do any favors for its price.
Yes, I think this is very interesting. So we're getting to exactly the end of the hour. One thing that I got curious when I started looking at the news about alternative investments yesterday, or day before yesterday, is that BlackRock has issued a statement that people should be paying more attention actually right now to the alternative investments and less to the standard, so to say, assets. I noticed, I think, even in 2008, I think there was a rise of popularity in alternative investments. And my very final question, just to wrap it up, and to connect it to today's situation, do you think in the times of the crisis and in general, social and political and different kinds of volatility, is alternative investment the way to go? Would you say so? And if each of you can say a couple of words, would be great.
I would say that the less risky way would probably be differentiating. So not to use only a channel of investment, but differentiating the portfolio of investment as much as possible. I mean, that's the quickest thing that I can think of. But yeah, differentiating will be definitely a less risky in a very volatile market. I mean, any market now is volatile. It's not really a safe market. So.
All right.
I think I agree with something, and if I can jump in, something that I'm seeing in the chat, which is when it comes to luxury items, they're really, unless you're, a very, very small set of people in the whole world, basically, you should buy what you love.
Yeah.
Sure. Because the only guarantee you have is that you will get to use it and love it. Everything else is off the table, right? And if you're really looking at investment advice, which no one here wants to give or really can give, but I do agree with, diversification as much as possible. You see cash is, there's a flight to cash in moments like this, which I think that's like in some ways the worst thing. We know historically, going back 20, 30 years, cash is the least, you're going to make less money. But of course, everyone wants to feel safe. So not to comment on overall investments, but in luxury, buy something you love, because really, truly the guarantee is you're going to look at that painting every day. You're going to carry that bag every day. It's going to make you feel great. And if you're in a class of people that can pay that for a painting or a bag, you probably have enough, set aside that you can eat, right? So it's everything else is, how do you get wealthy? And a measure of wealth is enjoyment, I think.
Yep. Couldn't agree more. Here.
I was going to say, just back up what Joy says. I think that, the one thing, the world is awash with cash, but cash today, especially with what the people who run the world, all governments are doing, which is just printing money like it's going out of style, means that cash has no real value at the end of the day. So if you're thinking about what's going to have value further down the road, it is some form of an asset. And if that asset is something you enjoy, then it's something you should have, whether it be a $500 print that's your first purchase if you're 25 years old and you're going to break your piggy bank to buy a picture because you like it, or a piece of jewelry, a watch, a car, a house, or whatever it may be. Sitting on cash where interest rates continue to be negative and people are out of work doesn't make any real sense from an investment vehicle standpoint. So I think that the recurring comment that comes out of all of this is the notion of enjoyment, of desire for something, and something that needs to be aesthetic. And its originality. I mean, even if if you're a young man and your dream is a Rolex, your first Rolex, you can buy a fake Rolex for $200 that's probably just about as good as the real one. But do you want that? No, you don't. You want the real one. You can take the fake one and put it next to the real one, and it takes a rocket scientist to tell the difference. But the point is that it's becoming, we have to get away from this notion of I'm going to buy something and it's going to be worth more tomorrow. I'm going to buy something because it gives me pleasure and because it is an expression of what I think and who I am. And I think that that's terribly important moving forward, especially when we look into a digitalized world, into where we're headed. And I think that that's terribly important, and it can take on a whole host of different forms, and it is up to people like us to enable, to encourage people to think that way. There's no such thing as a slam dunk, and we should be aware of that. And taking calculated risk is the best way forward. And I'm a very passionate and firm believer in all of that. And I think it's with the change in the world today, it's an ideal moment to sort of reset those values. It's not just about the question of buying a car today and selling it for 100% more tomorrow. It's a question of why did you buy it in the first place?
Wonderful. Tom, Vlad, do you have your final remarks? Anything you want to add? Or we can wrap up?
Yeah, I would say that there's something that, there's something about, there was something, like I said, icky about like looking at art in a very sort of black and white and investment terminology way. And I think that, I think someone just mentioned, Darcy just mentioned in the chat, I mean, the historical data, art is a poor investment. It's true. And I think that's why it is called an alternative investment. I think where you see some of the big numbers are the minority. However, there are, the ways, to be able to exist in that minority, sometimes you have to look at it in that black and white way. And I think Peter makes a great point. I think, every passing year, cash is a poorer and poorer investment. It's actually been a pretty poor investment for a long time. And there are certain social values that come along with owning art. And so, every time that Wall Street or Silicon Valley or something like this mints 100 new millionaires with Christmas bonuses, there's a reason why so many of those folks go into art. And there's the social signaling element of art and on luxury goods. Of suddenly you have a piece of art, and when you own a piece of art, suddenly that means the gallery you bought it from is inviting you to Art Basel, and then you're in this party, and then you're in there and there and there. And that's where you have this influx of new money into the contemporary arts, and where you see some of these really, really big prices. Now with digital art, I think there's a whole new genre to collect. There's a whole new genre to create new collectors. And I think that's where you're seeing so much new interest and so much new excitement. The art market always needs somewhere to grow into. Contemporary becomes post-contemporary, becomes digital, becomes something else. And I think we're seeing like a real awakening of digital art as something that's really collectible, and it's exciting. And I think I just saw this come in from Darcy. How do we get more people to buy art at every level? Well, I think digital art is it. Right now on Block Party, we've got CADAF artworks for sale for starting at $50. There's stuff at $300. There's stuff that
very, very affordable. Perfect. Well, I think that's good, and I think buying what you love is a perfect ending for this conversation. I really wish everybody to buy what they love. Thank you so much for participating and for this wonderful conversation. I thoroughly enjoyed it, and I'm sure our viewers enjoyed it as well. We continue tomorrow. If you would like to join us tomorrow for a conversation with artist Kevin Abosh and Elliot Safra, who has been a specialist at Christie for quite a while, but we're going to talk about, again, a little bit moving towards the blockchain mode. We're going to talk about crypto art, what is it, how it exists in today's market, and so on. So please, if you haven't signed up yet, please join us tomorrow. And we continue with the talk series next week and every week. Actually, I don't think we missed any week since for a while with the talks. So please join us. And once again, thank you so much, everybody, for joining the conversation, and let's keep it going. I hope for part 2 very soon.
Thank you.
I'd like to say thank you to you and for inviting us, and it's been a pleasure to meet all of you. And I hope that one day we'll get to meet in person and not just on a screen.
Yes,
So
exactly.
We have to make that happen.
Well said.
Absolutely.
Bye, guys.
Bye-bye. Bye-bye.
All right.
Right.
Thank you, everybody.